Hello and welcome back to our weekly market recap. I'm with Rich.
Hello, everyone.
And I'm Knight. Let's get to it. So this past week we saw the market up 1.7%, which means for year to date, the market's actually positive 1.1%, still down 3.4% from the highs in February, but up 46.2% from the lows in March. A lot of the rise this week we actually saw on Friday, and today was a turbulent day of we started pre-market in the futures up, then all of a sudden dropped during the trading day up until about the last hour when all of a sudden across the board, all three major indices started to shoot up with a lot of people jumping back into the market. So the two kind of main key points that we want to hit on is one, the Q2 GDP numbers finally came in and they didn't look great, but they did look better than what we were expecting. And we also saw big tech companies like Amazon, Apple report and come in way above what we were expecting. So Rich, do you want to briefly talk about the GDP numbers?
Yes, the second quarter GDP dropped 9.5%. That's an annualized rate of return. It was 32.9%. And what does that really mean? It means that when we shut down the economy and we had people stay-at-home orders, there was a lot less activity, and it was expected. And as Knight had said earlier, it was thought that the numbers would actually come in worse than they did. But since these numbers were very large, the worst ever experienced, there was an emotional reaction in the stock market, and it dropped on that day significantly. And as Knight has already said, but for the week, the market is actually up, and we're up for the year.
Yeah, so obviously we've seen a lot of volatility and that's continued, and it does continue to seem like little, and not that I would say this is a little news piece, but news articles that come out on a certain day are moving the market by a larger number, percentage point wise than would be doing last year. But as Rich said, still for the week and year to date, we are now positive. And what are some of those main factors? It really leads to tech and the huge weightings in, the S&P 500, especially right around the top, which is Apple, Amazon. Both of them came out with earnings this week. Both of them crushed earnings, and we saw investors react. Apple's even doing a 4-to-1 split, the first time that they've done it since I think it was around 11 years ago when they did a 7-to-1 split. So they're looking like their stock will be around $105 now when it does split. So some big news making waves, and people are putting their money kind of back into the market and rising it for the week.
Yes, and it also shows that our economy is shifting, as Knight has brought up before, from retail stores, brick and mortar types, to online, and the beneficiaries of that have been Apple, Amazon, Google, Microsoft, and if we look at their stocks, they've all gone way up.
Yeah, and so this is where we're currently in a reality that the market as a whole, there are certain sectors that are really exploding and doing very, very well. And that's why it takes, in this current reality, a smart tactical approach to know what are the sectors that are really going to benefit us. And instead of just investing maybe in the market as a whole or in, certain areas, it really does take an approach of saying, we believe that the e-commerce space is going to take off. We definitely want to allocate more funds that way, which is exactly what you've seen currently in our rebalancing of going, why we made so many changes, I guess, in this mid-year, more than we normally do on any one shift. And it's because we're making those changes to anticipate what this new economy, what this new reality is going to look like for the next 6 months, 1 year, year and a half.
Exactly. And as COVID-19 progresses or vaccine does, we may be shifting again.
Absolutely. And so I think to close, and one of the big things is the market is positive year to date, and kind of thinking back to through this whole roller coaster ride that we've been going through, what does it feel like to now know that the S&P is positive, that all the emotional reactions that arose when the market was dropping in February and March, and then all the emotions that were there, regret, lack of getting into the market maybe in April, May, and kind of weathering through it all, what has come up for you all? And I think it's important to notice. And then, it feels like a couple months ago, it would have been crazy to say in July, by the end of July, the market would be positive for the year. But here we are experiencing it. And so noticing kind of those emotions and everything that you've gone through, love to hear your experience. And as we always end, we're here to support you. Your money's here to support you. And we'll see you again next week.